Welcome to this video today. It's the 19th of September. It's Tuesday and it is 6:30 p.m. GMT. Now what we're going to be doing today is looking at the outlook for the USD against three commodity currencies, and the commodity currencies are the AUD, the CAD and the MXN. Now we're going to the charts in a moment. What we'll also be doing today, just for new viewers, is we're going to be looking at the technicals and very much keeping in mind the commitment of traders report, which regular viewers will probably have guessed is our favourite tool in Forex trading. If you're new to our videos, you can click an explanatory video beneath this one to learn more about them. Just in brief terms, what we like to do is trade with smart money commercial hedgers when their positions diverge away from large speculators and funds. Now, when we look at the charts, this is my view as of right now. It can obviously change in line with market conditions. If you want our daily technical analysis and our full trading techniques, you can get live access to our member center beneath this video. Right, let's start with AUD USD, and we'll look at the commitment of traders' positions first. The Australian dollar against US dollar chart. I'm just going to look at the COT net traders positions quickly before going to a chart and drawing some levels of entry, stop and target. Now, in terms for new viewers, commercials, smart money hedgers are in red, large speculators are in green. What we're looking for is divergence between the two groups. Now, here, the first one on the left, you can see the speculators build up a long position, and the commercials drop very short against them. You get a peak up here, then a nice decline. Then over here, again, the speculators build up a nice long position. Commercials drop short against them. Get a shallower decline. It's only a couple of hundred pips, that one. Then they go a little bit down and they build up the position to the same level again. This time, you get a nice run to the downside, probably about 350 pips. Commercials obviously against them. Now up here, you've obviously got this reversal candle, and it comes when the speculators are at their most long on the chart, and again the commercials have dropped against them. Seen a little bit of downside. It's not much yet, but I expect it to basically become a big decline. This divergence between the groups is one of the biggest in the last few years, and every other divergence of this size has seen a good decline in the Aussie dollar. So let's go and have a look at the chart and draw some levels. The chart of Australian dollar against the US dollar. And just before I draw some levels, just want to go to what I consider to be the peaking of the bullish fundamentals for the Aussie. We've already seen there is a big speculative net long position in the markets. Now, in terms of the Aussie, it's a proxy for risk on. That means that when stocks are going higher, the Aussie will normally be pulled higher by stocks. Stocks obviously up multi-year highs, and the Aussie has not really been gaining any traction to the upside over the last week or so. So we take that as a bearish fundamental. Commodity prices are topping out. If you look at Australia's major exports, iron ore, copper, zinc, coal, etc., you can see they're basically starting to fall. That's obviously a big bearish fundamental for the Aussie. We think they've got further to fall. RBA minutes out yesterday point to no rate rise and a bias towards a cut if you read them carefully. I'm not going to go into the minutes in detail here, but that's our view. Okay. Obviously, Fed tomorrow, they're expected to be dovish. If they are, has the Aussie got much upside? Don't think so. If they're basically even mildly hawkish, it could trigger a sell-off in the Aussie. Now, the one thing when you're using the COT net traders positions, if you look at this chart, it's pretty choppy and sideways. There's not really that much movement over the last few months. Volatility relatively low. In terms of when you're using the COT, when volatility switches to high, let's say the break in the Aussie comes to the downside, then you can expect follow through. A good example recently would have been maybe the GBP AUD. You had very low volatility. You had the commercials heavily bullish of the pound, speculators heavily bearish. Then we get a high volatility. It's a 700 pip rally. So when you're using the COT, you can always be alert for high volatility. Now, In terms of the COT candle here, this is the spec extreme. We get up, immediately reverse, and now we're seeing a little bit of downside. We're at the 20-day moving average. Now, in terms of our position in as a member center, we sold it through that level there, okay? So 80, 60, we're about 80. I'm gonna, when I do my PM update, I'm gonna scratch that trade in. I'm gonna reset entry. Now, in terms of, you know, the Fed tomorrow, obviously, could expect plenty of volatility. If we move to the upside, I'll be looking to sell a weakness. However, a downside break is what we're really looking for, and we get a nice big move to the downside on high volatility. I think it'll follow through. Now, the level that I think that's important to be taken out is really here. Okay, so need to get well clear of 79.50, I say 79.35, something like that, the way I see it at the moment. And then I think, yes, speculators could get rolled over on stop. Where could we go to? 77 would be my first target, but I actually think we'll overrun this. I think we could go basically down to 75.50. So basically retrace all of this move up. Okay, where would you put your stop? Okay, so you've got basically, yeah, obviously we break higher, we'll update our view. Okay, but yeah, if we break lower, you know, you just got this little poke above 80 at the moment. You've got these two candles behind. I think they should provide decent resistance. So I'd say about 80.50 back from that level. But yeah, just, yeah, if you're coming in fresh, just wait to see if she breaks support. Yeah, if it's a nice, yeah, volatile move, you could expect follow through to the downside and all those speculative stops to get run. Like I said, if we break up towards recent highs, then I'll update my view, but that is my view as of right now. So let's go and move next to what should we have? USD CAD, and we'll do the CFTC net traders first. Canadian dollar against the US dollar, and on the COT it's always foreign currency first. In a moment I'm going to reverse this round as we go and draw some levels, but there's something that's important that's happened in the way these groups have moved over the last few months. Now, in terms of the commercials, they put up a really big net long position here into this low. At the same time, the commercials drop really short against them. Now, it goes in favor of the commercials, but when we get up to here, okay, the commercials start, well, they've started shedding their longs here, and then they're moving net short and selling aggressively. Speculators have been caught on this run up, go net long against them. Do come down a bit, then we go right back up, okay? And the two groups now stand against each other with large speculators long the CAD, obviously short USD CAD, and commercials the other way around. Now, what is significant about this chart is the history of it, because if you take this chart 5 years back, okay, this would be the longest the speculators have been in 5 years, and this would be the shortest the commercials have been in 5 years. That, yeah, points to a break for us, and the technical setup looks quite good as well. Just move now and draw some levels on the chart. USD CAD daily chart. Just wanted to look at the Canadian dollar fundamentals first of all, because obviously, they drive, the fundamentals drive the chart at the end of the day with sentiment. Obviously, we've got very bullish sentiment towards the Canadian dollar. But I believe these CAD bullish fundamentals are peaking. USD CAD has been firm despite crude oil moving up. Sorry, I spelled moving wrong. And yeah, high crude prices or strong crude prices would normally be supportive of the CAD over the last week or so. They haven't been so. Bank of Canada, they did hike rates. That's what caused this nice move down here. And then the market expects more too quickly. Okay. Now, on the follow through here, we wanted to buy. I'll come back to that in a moment. But yeah, the Bank of Canada want to be cautious. And we got confirmation of this on Monday when Deputy Governor, Timothy Lane, he gave a very cautious, dovish speech, and that's where you get that candle up to hit the 20-day moving average. Now, from our perspective, after the Bank of Canada, we're going to come in on the first blue candle, which was this one, 121.35. And we're now just sitting below 123. Again, in my PM update, I think I'm probably going to take that profit in. It's 160 odd pips. Okay, it's not a big profit, but it's reasonable. And then we can wait to see what happens tomorrow with the Fed. Now, tested the 20-day moving average. It's going to be tested again tomorrow, I think, with the Fed. And it's the key level. If it gives way, then I think we're going to be going higher. 123.36. Let it get clear of that level, probably 123.50. Then you want to see follow through, okay? So let's say we do get a reaction to the upside tomorrow. I'd like to see a volatile candle and 124 taken out, i.e. these 4 candles here, this little cluster. Then I think we'll be moving sharply higher. And I think the first stop is going to be about 127.80. Okay. Now, in terms of, that's my first target. I actually think we could get up to 130. Stop could be relatively tight in my view. So if you've got these 2 candle bodies here, okay, you got body, tail, tail, tail. Okay, I've sliced that body, but I think, just above the 122 level, that should provide support. So stick your stop back at, let's say, 121.65. You've got, basically a 4-to-1 in terms of risk reward. And, again, like in the Aussie, if we do get a nice candle to the upside, I'm looking for all those speculative shorts. It's sort of 5-year extreme to get run on stop. So we should see what happens to this one as well. Right, let's move to the last pair we're going to look at, which is USD MXN, which is a currency I think really motor to the upside. It's been very choppy, but let's just go and look at why I think it could get a really big move to the upside. Sorry, I said that wrong. Why it could have a really big move to the upside. Right, let's go to USD MXN. Do CFTC net traders first. MXN USD, obviously foreign currency first again. So we'll reverse it around to USD MXN in a moment. What I find interesting about this chart is if you look at the speculators from here, I've got my cursor, they aggressively buy, they keep buying, they keep buying, they keep buying, then they flatten out, okay? So we've got them flattening out into this level here, which is actually holding. It's like we're building up a little bit of a channel, okay? They did drop down a bit. They've come back up to the same level again, okay, just slightly over it. So we're going to need plenty of speculative buying or more speculative buying to come in to push the Mexican peso higher or the USD CAD lower. The commercials have mirrored them in the opposite direction, obviously sold very aggressively. Now, in terms of this pair, when you get the groups diverge as much as they have here historically, you are prone to getting fairly violent moves, okay, or very volatile moves. And obviously, we think it's going to be in favour of the US dollar. I'll explain a bit more why this will be, a big mover in our view. Let's just go to the chart of USD MXN and I'll explain in more detail. Here on the US dollar MXN daily chart, and if you just look at this choppy sideways action, from a pure technical perspective, I don't think it would interest many technical traders. However, if you know the COT, it's a really interesting chart formation, which I'm going to go through why in a little bit more detail. And I'll put here, the only bullish MXN fundamental is this. The Banixco central bank interest rate, 7%. Fed interest rate, just 1.25%. So you can pick up 5.75% on the carry trade. Now, if you're leveraged up 10-to-1, that's well above 50%, isn't it? So, from a funds point of view, they've come in, and you can see they've even built up short USD MXN positions in this congestion zone. Okay, it doesn't really matter that there isn't that much movement. They're picking up the interest rate, so they piled in. But I've said the speculative buying has kind of leveled off a bit. We've got a bit of a channel. The bottom of the channel is really around there. Okay, or recent channel. So you're looking at about 1760 for the base, which we haven't been able to take out, as we noted on the COT chart. Now, if tomorrow the dollar could pick up a little bit of steam to the upside, what's going to happen? Well, you've got to think of how many funds have come in here in this congestion zone. There's going to be stops all over the place. It's just a question of where do you come in on strength. My own view would be you've got 1790. You can wait for this level here to give way. Okay. For me, with the Fed tomorrow, I think that's just a little bit far away, although cautious traders might want to wait for that. I'm going to be more aggressive. I've already got a small trade in on this one. I'm going to hopefully add to it. Coming through that capital high there. Give it at least 100, 200 pips above that though, okay? And then see if she runs. All the funds who put in big positions here are just going to get hit on stop. Where's the first target? I'm going to say 1840. Okay, now in terms of stop loss protection, I don't think you need to be too far away. As soon as she breaks, you're looking for an aggressive move to the upside. Okay, you're not looking for it to pull back at all. So just back behind 1770. Okay, so I'm like 1767.50 or something like that. If you get big blue candle tomorrow, I think it'll just continue. You could say there's resistance around here that just won't hold for us due to the extremity of the COT. Just looking for a big blue candle and then a run on. We shall see. The one thing we've been trading, obviously USD MXN. It does have obviously the swap against you, so it's not a position that you want to hold too long as a speculator. Certainly if you're US dollar bullish when it's in a sideways channel. So what I'm doing tomorrow, I'm going to add to the small position I've got in, see if she runs, and we're just sitting above the 20-day moving average at the moment. I personally think this is really worth a small trade. I know it's got a little bit of a wider spread than the majors, but when this one gets going, and I've seen CFTC net traders extremes like the one we just looked at in the past, you normally do get a really violent, volatile reaction when you get an extreme like that. So for me, it's worth a small trade and look for immediate follow through. Right, that is my review of USD MXN and the other two charts. Let's see how they go. Thanks for watching me as usual. Take care. Have a good day.